the last podcast that we actually spoke about ELM coming in, margins being increased, ROI getting ahead, there is also a second wave of blow that can come up from SEBI. Do you have anything to say there?
Right.
Can we start with what is ELM? I think a lot of people don't know.
So ELM is extreme loss margin. So when you are selling options, when you are trading futures, you have to put up margin to the exchange, and there are different kinds of margin. I'm not going into all of those.
Yeah.
So basically, if you want to sell one straddle in Nifty, it would normally cost you around ₹1,00,000, right? So that's
straddle is selling
a call and a put option together. That's what a straddle is. Again, making things very simple. Thank you for that, Ajay.
A naked straddle.
A naked straddle.
Without hedges. Yeah.
Yeah. So when you sell a straddle, the margin requirement, which is the money that you have to give the exchange to sell that call and put option together, is around ₹1,00,000. Now that is what margin requirement is.
Yep.
Now this margin requirement has multiple different components inside. I'm not going into that. And that different components put together is the ₹1,00,000.
Yeah.
Now exchange is saying that along with this, now you put up something extra called as extreme loss margin, which is 2% of your total exposure into Nifty.
Yeah.
If you're trading Nifty. And this will apply only on expiry day. On other days, it wouldn't be there.
okay.
So the exposure is the total contract value of Nifty.
Yes, 2% of your exposure into Nifty. Nifty today is at what, 24,000?
Yeah.
Yes.
And the lot size is 25.
Yeah.
So 24,000 into 25 into
2%.
2%, which will come out to be nearly 20,000.
Yeah.
Correct.
Right. So we spoke about a straddle. We can talk about iron condors as well, because that's what we trade. So for context, iron condor, again, Ajay is looking at me, right? So iron condor is you sell a OTM call option and an OTM put option, and both the OTM call and put option will have hedges.
Yeah.
Right. So that's what an iron condor is. So normally, to sell an iron condor, the previous margin requirement was nearly ₹35,000.
Okay.
So even today, if you are selling, so if you are a positional option seller, you enter your positions on a Friday and you carry it on a Monday, Tuesday, Wednesday, and then you reach Thursday, which is expiry day. That's where the new circular kicks in, saying that on expiry day, the ELM kicks in, which is the extreme loss margin of 2% kicks in. So till expiry day, your margin requirement is only 35,000.
Yeah.
But on Thursday morning, it goes up to ₹55,000.
Oh, so that
All
is-
of a sudden.
All of a sudden,
Okay.
which is nearly 60% increase.
So I would take a trade on, let's say, Friday.
Correct.
And then I'm taking a trade with the ₹35,000 for
Correct.
my hedges, whatever I have. Then once I reach Wednesday, my still the current margin requirement is only 35.
No problem.
Thursday morning, when I see my margin requirement should be 60,000, around 60,000.
Correct.
If not, there would be again low margin penalties or whatever will again
Yes,
kick in.
you would get squared off. There could be penalties and stuff. So if you were a trader, what would you do?
I would stop trading actively on Thursday, or
That's
at
one
least
option.
reduce my allocation
Yeah.
on Thursday.
Correct.
I would probably...
Or you cannot do on a Thursday. Ideally, you would do that on a Wednesday.
Yeah.
Right?
Yeah.
You will
Yeah.
reduce your positions on
Yeah.
a Thursday.
Ideally, I would just go with 50% allocation, or probably I would have to square up my positions on Wednesday evening.
Correct. That's another option. Another option, a plain vanilla option, is to maintain ₹60,000 right
Yeah.
from Friday.
Yeah.
Whichever you do, like barring your changing your trading style, which is adapting, which we will anyways have to do. If you're not to adapt in terms of your trading strategy, your ROI is going to get hit, because the money your ROI is just a simple formula of the profits you make divided by the capital you put in.
Yeah.
So the profits you make is not changing, because the lots you're selling and the premium you're collecting remains the same, but your denominator is increasing.
Yeah.
Because of which your ROI will get hit. So in today's world, if you're not adapting to this, if you are to put this extra money, your ROI will come down by some 30-40%.
Yeah, that's huge.
Or else you'll have to adapt.
Yeah.
Okay.
So luckily at marketfeed, our trading strategies do not trade a lot on expiry day. Our positions normally end mostly by Wednesday, and Thursday we might carry one or two legs here and there. So we have not been hit. But what is most important is what you said earlier, why did SEBI even do this? SEBI wants to decrease the number of retail traders in India and want to reduce their losses, right?
Yeah.
They're losing
This is-
50,000 crores.
They're trying to protect the retail investors from losing money.
Correct. So this is one measure.
Yeah.
So what is dangerous or what is scary is, now over the next 1 quarter, 2 quarters, they'll see by introducing ELM, by increasing the lot size, which is going to kick in January,
Yeah.
they'll watch the volumes and watch how retail is trading. Are they now trading less? Are they losing less? If they are not losing less, what will SEBI do? They will increase the Thursday's ELM. Today it's a 2% increase.
Yeah.
To 5%.
Oh.
And they'll also introduce an extreme loss margin of nearly 3% on Wednesday as well.
And the lot size increase will inherently mean that again, your ELM is going to be huge.
Correct.
And
so
just
all
here-
put together, I mean, if all the the lot size is going to happen,
Hmm.
but this ELM going to 5% on Thursday and a 3% on Wednesday, that we don't know.
Yeah.
Might happen next quarter, a quarter after that, a quarter after that, all depending on how SEBI is looking at things. But even all of those things are happening, again, only thing traders can do is adapt, change strategies, look at market in a different way. You'll have to rework on your strategies from a very fundamental point of view. You'll have to really work in a different way. But yeah,
so
interesting.
I have few numbers here. When you're looking into the options premium turnover in indices, right? September 12th, which was a random weekly expiry in September, the premium turnover was 75,000 crore rupees. Okay. September 26th, again 71,000 crore rupees. So just to give you that it's an average number in September. October it had fallen, even though the circular was not in effect. But if you're looking at November 7th and November 21st, the premium turnover has reduced to 50 to 56,000 crores. The more important point is that it seems to be effective, right? Whatever SEBI is trying to do here, options premium turnover has decreased in October as well as in November. If this trend continues, I mean, overall, I would say they're trying to achieve or reach to the goals that they want to reach.